Hey everyone, it's Chuck MacPhee with the Level Up team, and just wanted to send you a video today talking about kind of the state of the affairs of the real estate space and what's going on with our Atlanta real estate market and Q1 2023. So thought I'd just drop a little bit of nuggets of information for you, kind of what we're seeing in the marketplace right now and kind of maybe where it's going. Real estate's been an interesting space the last several years. We've gotten some crazy years kind of ever since 2020. It's been a really crazy time, depending on which side of the transaction you're on, whether you're a seller with multiple offers and moving out quickly, or a buyer competing against all these crazy offers and crazy high prices and all this craziness really at the end of the day in the real estate space. But just a quick update for Q1 2023. We're still seeing a carryover of that 2022 market where probably the best way for me to describe it is that it's volatile right now. Mortgage rates have risen significantly since the second half of 2022, and that's impacted the marketplace to some degree. We saw some buyer activity slow down towards the second half of 2022, and we're seeing less transactions transact. I think pendings were down almost 20% from 2022 this quarter. However, things are still continuing to move. We are still seeing price appreciation. I think that some of the myths are out there that prices are going to fall in our marketplace, and we're not seeing that. So real quick, kind of the summary is we have a fundamental supply and demand issue in the Metro Atlanta area. We just don't have enough homes for the consumers that we have out there. I think the last stat I saw, we were about 62,000 homes short to meet the demand. And kind of what that means is that if we built 62,000 homes tomorrow, those would all get consumed and purchased within a 12-month period. So we have a lot of demand out there and just not a whole lot of availability from a home perspective. So that fundamental supply-demand issue, I don't believe prices will fall. I think it's very price point sensitive. Maybe as you get in the higher end point, 2 million plus, there's some probably difference in the data there. However, in kind of the most of the metro area, we're still seeing price appreciation. It's not going to be 30% year over year, what we've probably seen since 2019, 2020, but we are still seeing prices continue to rise. And so home values, again, kind of stabilized, continuing to rise. Demand seems to be picking back up. We've had a very busy March. We actually had a very busy first quarter overall. Mortgage rates are kind of just bouncing all over the place. It depends week to week. You're probably looking in the mid sixes at the end of the day, and when this is being filmed, kind of the tail end of April actually. So I think the consumer is just getting used to that. So it's not historically the greatest rate, of course, but it's not the worst rate either. So people are still going to move. People are still relocating to the city, and people still need housing at the end of the day. So we're seeing the demand increase. Just this past week, I was in a situation with multiple offers on a property. I think there was 14 offers. So again, I say all this that it's the real estate space is still, in my opinion, one of the safest places to park your money. From an investment standpoint, prices are going to continue to rise, in my opinion, here in our marketplace. And so whatever side of the equation you're on, it's a great way to create some wealth and to create some opportunity. There's still opportunities to go out and buy property as well, though. We get creative, don't get me wrong. I've closed over 1,300 transactions at this point, and knock on wood, I've never had a homeless client, so let's not start now. So we find a way to get it done. So quick summary, Q1 2023, volatile is probably the best way to describe it. There's opportunities out there. Prices are not falling. Inventory was rising just a little bit, but it's getting gobbled back up again. So we're still having a supply-demand issue. And it's going to be probably that same trend, I think, for the foreseeable future. So everything's case by case. We still have to do the fundamentals. We still have to price the property, still have to market the property, present the property, get competitive, get pre-qualified on the buy side. We still have to do all the key steps in the real estate transactions to make it as smooth as possible. So that's my kind of quick and dirty Q1 2023 update. One other thing real quick I wanted to kind of jump into, because it was just in the kind of the news this week, and I'm not going to pick a side on it, but just kind of state the facts. But there's this like mortgage loan level price adjuster that's out there in the media right now, where I think I'm hearing stories where, hey, if I have a really good credit score and I'm putting more money down, I'm actually going to be paying a higher interest rate than somebody with a lesser credit score. And that's not actually the facts. However, it's not totally far off either. In the scenarios that I've learned and kind of done some research on, I'm just going to throw out a scenario hypothetically, and it is what it is, whatever the political side of this is. I think it is trying to promote home ownership at the end of the day. I truly believe in, so I think that's a great thing at the end of the day. But hypothetically, you have a 780 credit score, you're putting 20% down. In today's market, let's just say you're going to be paying a 6%, all hypothetical numbers here, 6% interest rate on your mortgage. So you're well qualified, putting good money down, you're at 6%. Maybe you got beat up a little bit on credit in the past, or you're struggling a little bit, and maybe your credit score is not there. Maybe it's below that 680 number or that 680 number. Historically, you would pay a higher interest rate than a more qualified buyer. Let's just say historically, your interest rate was going to be at 7%. So there was a 1% gap on the two different profiles. Essentially, this new leveler adjustment, which has actually been in place for quite some time now, it's been in place for a few weeks, so it's priced into a lot of these mortgages. You're going to now, instead of pay your 6% interest rate, you're probably going to pay about 6.25% on your mortgage. That other individual that was paying a 7%, instead of paying the 7% now, they're going to pay a 6.75. So the gap between those two prospects or those two individuals is going to get a little bit smaller. The goal there is trying to help the lower credit score individual get into home ownership and to make it a little bit affordable and not paying the inflated rates. So will it impact both parties? Yeah, it is going to impact both parties. So that's a little bit. I think there's a lot moving on there and still to be determined as this gets rolled out and kind of absorbed a little bit more. But I did want to address that just timely as it just came out this week. So as always, if you have any questions of what's going on in the real estate space, even, hey Chuck, what's just going on with my housing situation? We love talking about this stuff all day, every day. There's no strings attached. I do pricing evaluations for clients all the time. Love to do it. Very good at it. So if you have any questions or if we can help navigate anything on your side, please don't hesitate to reach out to me. As always, thank you for your continued support, and I hope you have a great start to your summer. Take care.